Hello traders, I'm Juan Maldonado from ElliottWaveStreet.com. We are going to check this week the euro, the dollar CAD, the S&P, and oil. I'm going to share with you our strategy, our Elliott Wave strategy to follow the price, to follow the waves, and of course with the specific entry points using the volume profile, using supply and demand, and price action. So let's start. All right, here we have the euro. The euro has been pretty sideways over the last week, and that's a fantastic setup. So first of all, we have this high right here. The price started to move down. We have this first swing down here. We got the connector wave, and we got here a fresh low. I want to focus here on this low. Can you imagine the amount of liquidity that we have here? All the traders who went long here, the ones who bought here, or here, or here, let me change the color here, or here, or here, or anywhere during this cycle, because there are a lot of strategies. Something that they have in common, of course, the ones that didn't book profits or move their stop loss, is that they are having their stops here. So this is an area where clearly we have a stop loss area. Now, who else could be here? The sell stop orders, traders who want to short when the market moves under the low. Those traders, of course, have a terrible execution. Who else could be here? What I call the big guy. The big guy is a set of 10 institutions. So the big guy will be here as well with their buy limit orders. All right. So with these first two, there are sellers, and the buy limits are buyers. So if the price comes here, and we have all these sellers, the stops and the sell stops, what do we expect to happen? Well, clearly that the price breaks down and continue lower. That's the logic. But didn't happen. Instead, the price rejects, as you can see. So when the candle closes back above the low, the previous low, that's the signal that our big guy was placing his buy limit orders and was absorbing all the losses from others and the sell stop from the new ones. This is a fantastic move from the big guy, because all the money from the stops, from these losses, are going into the big guy pockets. And now he has trapped all these sellers. Where do you think they are leaving the protective stop loss? Well, clearly here, right? Some of them here, some of them in the middle of the box, some of them just here above the entry point, and some others here. So those are the liquidity areas. This liquidity area has been taken out. This one the same, and now we're going to for this one, and we're going to take out this one as well. So this is a beautiful institutional cycle. Of course, the first entry point was here. The second entry point was here. And now we're in the third entry point that could be either here at the rejection, or even better, traders, if we have some sort of bigger corrective for the second wave and we start getting apart from the fair price. The fair price is right here, coming from the volume profile technique. We don't have access to volume in the Forex market, so we're using this technique that actually brings the volume by showing where the price has been spending more time. So it's a great technique because we don't need to have the actual volume of the market. But here, traders, is the fair price, this area. So as traders, we need to buy far from the fair price. We need to buy cheap, far from the fair price. We're not going to buy it at the fair price. It's crazy. We need to have a discount. So if we didn't trigger here, then we need to trigger here. If the price comes out here and give us the last leg down before the move up. or at least a deeper corrective wave for the second wave. Those are the entry points for this week. And the target, of course, is going to be the previous high, the 110.20. Once we get to this area, this is going to be a liquidity area as well. So if the price comes here and we have, after the price moves above the previous high, a candle closing under the high, that's the new entry point. That's the sell trade and the protective stop loss above the high. And we can start a new narrative from there, selling the top of the market. That's going to be the strategy for this week. And with Elliott Wave and the profile, we can get a clear idea of the market valuation and the market auction process. And of course, with price action, as you have been seeing, we can validate the end of the wave. Because, of course, if we don't learn how to validate the end of a wave, the Elliott Wave theory is not going to work. Because the Elliott Wave theory itself is not going to provide signals. But when you have it and you combine it with price action techniques and in the proper areas using the profile, you have a fantastic strategy, a powerful strategy that you can easily follow the price and the direction of the big guy. If you want to learn more about the volume profile techniques and price action techniques in the Elliott Wave Street membership, we have education and we have also live market analysis every day. Let's continue with the dollar CAD. All right. So here on the dollar CAD traders, the plan last week was finding the end of the second wave. And look at this beautiful rejection. So similar to the euro, the price moves under the pivot, is hunting stops, and you may be asking, why this is hunting stops? Well, because the price rejects. So we know that this was a campaign to hunt these stops after this candle, only after this candle, because the price was able to move under the low, and then it moved back above this previous pivot. Some traders believe that the close is not important, and some others say that it's important, right? Well, but the point is, I prefer to wait for the close, right? I trigger at the close and that's it. Some traders, just with the price moving above the level is enough and they trigger. My case, I'd like to wait for the close. It's just a personal preference. And I wait for the close to have a more objective, like more systematic approach. And the stop loss is under the low. So this is the risk, right? And then we have the one-to-one, we need to do something. We need to manage the trade, close half of the trade or 30% or whatever, right? Depends on your strategy. But do something to make sure that this is already a break-even trade. And if you have a home run, fantastic. You can easily have a 1-to-3, 1-to-5 trade. So this is a great example. Now let's go through the live market, because I believe that active learning is key to accelerate the student career. You know, learning in the live markets, seeing in action the strategies is the best approach to learn fast the techniques, accelerates the career. When the student only learns from the past, from previous examples, of course it's important when you are learning to see a lot of examples and a lot of things, but then you need to quickly get to a live market training. So here, traders, let's move into the live market. The fair price coming from the volume profile is here. Question: if you are a trader of anything, if you want to sell phones, if you want to sell cars, anything, you need to buy them at a good price. You need to buy them per unit cheaper than the price that you are expecting to sell, right? That's any trading business. You are not going to buy expensive and then sell cheaper, because of course you are going to lose money. That's some of business basics. But when you check the retail world in technical analysis, all the techniques, the moving average crossovers, the Bollinger Bands, all these techniques, the head and shoulders, the double top, the triple top, right? All the techniques that you can imagine the signals are happening at the other side. So it's too late. It's extremely late. So something that you need to focus on is finding the entry as soon as possible, because you don't want to waste your time, you don't want to waste the money looking for a trade that clearly is not going to, that clearly is too late. So that's going to be an additional disadvantage. Now, we have here the fair price. So the volume profile is not a trading strategy. It's just telling more information that with the bare eye sometimes is hard to see. So this is a fair price. You are a trader. Do you want to buy at the fair price? No, of course not. Let's suppose that the price sell-offs and is here, plus rejects. So we have a nice green candle closing above the previous W. Question, at this area, is good to trade long? You have all this discount from the fair price. Yes, of course. So if you buy there, if you leave a protective stop loss here, 1% or less of the account, roughly here you're going to get a 1% at the fair price. And if the price explodes to the other side, as we are expecting this week to have a big wave 3 on $CAD, fantastic. If not, we have a 1-to-1 or a 1-to-2 if it gets at least to this high. But this is an advantage because we are buying cheap. Of course, if I wait and I wait for 2 EMAs to cross over, let's say, right? If I wait and wait for 2 EMAs to cross over and they cross here when the price is at the previous high, of course that's crazy because I'm buying expensive and that's too late. So that's my point. We need to execute the trade as soon as we can near the low. So that's the strategy on the $CAD. Let's have a look at the S&P. The S&P, let me show you the weekly chart. If you have been watching my videos, you know that I'm bullish, that I have been bullish on the S&P since weeks ago. And here we were looking for the buy trade here as well with a specific entry. And this has been working fantastic. So we already have an edge. We already have an advantage over other participants. These longer term trades, I like to place them with SPYs. And the shorter term trades, like scalping, they trading with ES, the micro, the mini, or a CFD for traders outside the US. So, of course, this is a great setup because after this breakup, look all the advantage that we have from our setup. We were able to start buying below the 4,000 area. So we have a huge advantage. And at this stage, we don't care, for the longer term. We don't care. If the market crashes, okay, was a good experience. If it continues, because I believe that's what is going to happen, of course, it's not a 100% chance that that's going to happen, and buying here is crazy. For the longer term, you can buy at the most expensive price. But the plan is to get here to the 800, to cross the 5,000 and probably get to the 6,000 area. So that's for the longer term strategy. I'm keeping my bullish bias. Now, if we are day trading, if we are swing trading, of course, at the end, we don't care too much if the market is going up or down because we are going to make money. But last week, we were finding the end, the completion of our second wave, wave 2. So finally, it changes the momentum. Look, we were seeing low, lower low, lower low, lower low, lower high, right? Lower high. So we have a bear trend. So if we are looking for the end of the wave 2, imagine someone adding Fibonacci levels here and trying to buy. Oh, poor people, right? Losing a lot of money. But what if we either trade the rejection of this area? Here we have a previous wave 4, which is a key area. And here could be an entry point, or here could be an entry point, or at the change of behavior of price. Look, instead of seeing the lower highs, we are seeing a higher high. This is a transition for the first time. So you can wait for this structural change, and you can buy here at the corrective, right? Or here at the corrective. This one is a little bit more hard because it was too fast. the target, the previous high. We are at the target. The market is imbalance, is sideways. So we have demand at higher prices. Here, the market is likely to continue higher. Right? So it's building a narrative with the Elliott Wave theory and validating step by step the process. Of course, with this analysis, you can apply it on the ES, on the SPY, on any instrument, on S&P options, whatever you like, because it's going to be the same direction. Let's have a look at oil. Here we have oil, where price has been building the corrective leg. So this is actually showing a bullish trade happening right now. Let me highlight the setup for you. As you can see, after the WXY formation, right here, we got the rejection. And we are seeing that that green candle is the signal. And this is the live market. Now, the stop loss should be under this low. Right? The entry here, no more than 1%. We always need to trade with a stop loss. Always, always, always. And here, we will reach the 1%, 1-to-1, enough to book some profits. If after that, the price collapse, we're fine. We have a break-even trade. If it happens to be the plan that we are looking for, then the target is going to be the previous high. And at least I'm going to show you a better target in a second. Now, on the higher time frame, like the 4-hour chart, or let's go to the daily chart for a second. On the daily chart, traders, I'm looking for the oil to come back into this area, to move above this high. That will be fantastic. Look at these rejections here. So these are buy trades, buy trades, buy trades. This is a center line. And this, we're seeing a discount right now that we can use on lower time frames, of course, to buy it. But once and if, of course, oil moves under this high, above this high, we are going to sell it at the rejection. Not only moving above, right? Imagine someone selling because the price is moving above, and the price is moving with green candles moving up. And someone selling, of course, it doesn't have any sense. But if the price moves above the area and we have a beautiful rejection, that's where we can sell it. Of course, we need to read the price action once we get there. But in the meantime, we can focus on the bullish trade to capture this distance with a risk. The trader that doesn't trade with a risk is gambling. I always tell my clients, you need to manage the risk. Because if you don't manage the risk, you are going to lose your money. So always use a stop loss. Always. You are going to have some losses. Yes. You are going to have some break-evens. Yes. You are going to have some home runs. Yes. And in the home runs is where you are going to make money. But it's a matter of patience. Patience. A lot of patience. Traders, now, if you like this analysis, then I'm sure you like it. Here on ElliottWaveStreet.com, in the membership tab, you can find the membership details. It's a fantastic membership where you can get immediate access to our members area with access to the Forex, the stocks, or the full access. You pick the plan that you like more accordingly to the markets that you are trading. We have the Forex, the stocks, or the full access, and here you can have the list of instruments that includes each. And you will get the Elliott Wave daily report with charts on the daily, the 4-hour and hourly charts on all these markets, Monday through Friday. And you will get also the daily video with the point of view and a strategy on each instrument every day, Monday through Friday. And you're going to get also access to the education, a complete library of videos with Elliott Wave education, with a volume profile, with momentum. I'm working in a new project that is going to be posted there soon as well. So you are going to have a lot of value. And the best news, just $19 the first month as a trial and you will get immediate access to everything. You can sign up here and you will get by email your username and password. Alright traders, so please have a fantastic start of your week, a nice holiday, 4th of July, and I'll see you soon. Take care. Bye-bye.